Yeah, it basically is the idea that we people think we are in a stronger economic environment globally than we really are. And again, it goes back to that pandemic statement I made, where I think underneath the surface, things aren't all so good. We kind of hit a lot of it with money. We printed our way out of it so that we didn't stay down long. And again, I say we, but it's really around the world. Um, and I think below the surface, we really don't have the kind of demand that you would think we have based on statistical GDP, et cetera. And I think that, energy is basically the supply demand of energy is still skewed to the fact that there was excess supply. And yet that was not how people were perceiving it. Everybody was perceiving it as energy is tight and prices have to go up. And I just didn't see that. And it's been borne out, I think. So, and part of that, I'm sure, is the whole focus on alternative energy, et cetera, kind of took people away from really um, a true focus on fossil fuels in the way they, analysis wise, the way they should have. I do, obviously, probably goes without saying, but I do think, um, you know, this idea that fossil fuels are on the way out is obviously at least one cycle premature, and probably more than that. I think we're going to see fossil fuels be one of the big lead stories of the balance of the decade after we get through the bust.
We were supposed to run out of oil in 2000, I remember back
Right.
when I was at school, and
What
it's like,
what you will see, and probably Trump will help this along, is you will see, I think there's going to be drilling in the Anwar. I think there's going to be drilling in the Gulf of America. um, and, he's renamed it because Biden tried to stop any drilling in the Gulf of Mexico. So, documents all say Gulf of Mexico. So they just changed the name to Gulf of America. And it can go forward. I think I don't know the legalities, but that's the I think you're going to see obviously off the coast of South America. There's big oil fields there. I think you're going to see a lot of the offshore drilling pick up speed. Obviously, if you get prices going where I think they're going to go before the end of this decade, it opens up a lot of places that aren't viable at $70 oil. And so I think fossil fuels will be a big story.
It's funny. I saw a piece about Brexit that someone had written on Substack recently. It was very good, and it reminded me of just how much insanity we lived through in the years immediately after 2016 that I'd completely forgotten. And not this as a complete betrayal of the UK electorate by the Uniparty, whether it was Conservatives or Labour, didn't make any difference. And I'm wondering whether something similar will happen in relation to Biden, that people will look back in a little while and think, I can't believe that happened while we were alive. This
Yeah,
complete abject insanity, this Marxist woke L, LGBTQ plus, it's
yep,
just staggering,
it is.
absolutely staggering. Like everyone was under some kind of a spell.
Well, it is. It really is some kind of a statement on how that's why I'm a contrarian, but how for the vast majority of people they have to be with the crowd, and now we got a new sheriff in town, and the agenda is very different, and a chunk of that crowd is already moving over. It's like, how can you be 180 degrees over to the other side after being where you were? It just is. I think it's another look into crowd psychology.
I mean, Google at one point had a tagline, "Don't be evil," and I noticed they quietly dropped that. So I'm assuming that the tagline is now is be as evil as possible.
Right. Yep.
I was looking at some statistics on the amount of children that people in the West are having in terms of the more industrialized their economies are, the less children they're having. And it's something that is not going to be a problem now. It's going to be a problem further down the
Yep.
curve.
Yep.
Do you have any opinions on that?
Well, I often get people asking whether demographics is part of my forecast, and I go, not at all, really. The macro is so dominant right now. What the the big swings that we're going to have are so dominant. I don't really worry about the demographics, but I think the demographics fit into the same scenario pretty much.
Yeah.
The fourth turning and all of that I think fits in, and yet none of my forecast comes from that at all.
Yeah. It was almost something that it kind of plays into exactly what you're saying, that this will be one of those other left field things that people haven't thought of, and then afterwards go, oh, actually, this is why we can't we don't have we don't have, for want of a better words, young taxpayers, and a vibrant younger economy in order to grow our way out of this problem. So
Yep.
it is a problem for, a decade perhaps in the future, but it is not nonetheless an issue. And given that we are presiding over potentially, I mean, you've got 50 years experience in the market plus, and Tim and I have got about 30, which is obviously a lot less than you. But we've seen some swings in our time, and we're actually coming to a point where we're potentially seeing the biggest swings of our lives coming up. Are you being asked to manage money? How are you personally going to be dealing with what's coming? I mean, you're very generous on Twitter. You answer lots of questions all day long, and I'm sure you don't have to do that, but you do it. What are your plans for dealing with this very volatile period coming up?
Yeah, I made the decision several years ago that I thought I could, I'm basically retired in a lot of ways. This I spend an awful lot of time doing this, but
You seem to be working hard for someone who's
but
retired.
but I made the decision that there was a place to educate the masses, thanks to Twitter, thanks to X, and that I could have an impact on a group of people that really have no idea what they're doing and get kind of swung around by all the noise out there. And that if I could get a platform and show, basically be that contrarian voice out there, that alternative voice, that they could at least begin to understand that just because the biggest voice says this is so, it's not necessarily so. And I've being up to 212,000 followers, it's a small. I'm a big fish in a small pond. I'm not impacting as many people as I probably could in other ways, but there are a lot of little guys that I think I've helped.
But
To
especially given the collapse of trust in mainstream legacy media now.
Yep, yep. And I, most of my focus, as you guys see, is financial, but I am not afraid and wasn't afraid when Trump was running to speak out about you know, provide the conservative voice to speak out against what I thought was a lot of wrongheaded stuff out there in the media. Um, and I think that's a necessary thing out on social media. There's an awful lot of stuff out there that's just wrongheaded. So that's between these interviews and Twitter, I think I reach a lot of people.
Oh, absolutely.
Not all of them are followers, or a lot of them. I don't really know how X works, but there's an awful. I can promise you, there's an awful lot of, because I see, I can spot. I've done this for so long, and I know my views, and know how unique some of my stuff is. Not all of it, but I can spot when other institutional people are out there mimicking what I said,
Right.
and they don't, almost never do they attribute it to somebody else. They want to say they thought of this or whatever, but it's pretty easy to spot some of my extreme views. And so I know there are people on Wall Street that follow me, even if they don't admit it. So it's, keeps me busy in retirement.
So when are you going to launch Hunter Coin?
Yeah, people keep waiting for me to get on board of Bitcoin, and I go, I'm just not there. Let's see what the bus does.
Have you thought about a Substack, or is it you do a letter though, don't you? So you do is that a monthly letter or
I do a quarterly letter,
quarterly?
um,
Okay.
and I've got a decent subscriber group, but I could be a lot bigger if I wanted to be. But again, you know, I really believe in balancing my life. Not I want to have time for my grandkids, and you know, not just kind of put them off in a corner and say when I have time I'll get to you guys. So it's I'm comfortable doing what I'm doing and not looking to expand it.
Great. You got your priorities absolutely right there, it seems. Tim, were there any final questions for?
Nothing to add. We've covered an awful lot of ground today.
Yes, absolutely. So at this point, David, was there anything that we hadn't asked you that you wanted to say to people?
The only thing, and I think we've talked about it a little bit, but I've said this before in interviews. Um, Psychology is such that it's easy to say, well, if this is you know, we're within final months of a 42-year secular bull market. Ordinarily, wisdom would tell you you're not going to be smart enough to call the top, and so you got to kind of start understanding there's big risks on the other side of the mountain. So you know, don't be afraid to take chips off the table, etc. The only thing that makes this a bit different is that we are probably going to cover an awful lot of ground in that last small period of time. So whether it's 3 months or 6 months or 4 months or what, we could have 25% from here in the Nasdaq and the S&P and Dow, and closer to 45 or 50% in the Russell between now and the top. So you have to look at both of those things, time and distance, and understand 25% is easily 2 or 3 years worth of returns, and 45 or 50% is more years of returns than that. So it's hard to say. Just look at the fact you're getting closer, and you should be smart and get off and take the chips off the table. Just and psychology is such that understand that you could get out today and feel pretty good and say, I can't call even the last 20%. I'm not that smart. The psychology is going to drive you back in at the top. Chances are you're going to say, gee, I left too much on the table, and now I'm hearing that this cycle might go on for a few years. I can't afford to be out. I'm getting back in, and you get in at the top. So just don't outsmart yourself and think that, because there's going to be lots of people out there telling you not to play it too close, not to, and it's just psychology is going to make it, no matter what you do, it's going to be hard to do it right.
Yeah, yeah, yeah. I mean, it's hard for a reason, isn't it? That's the thing about markets. If it was sort of naturally easy, everyone would just make money, and it just doesn't work like that.
What
Yeah,
people don't realize is at the top, I can talk about the top and how it's going to be, I'll be spotting it because so many people are all in. At the top, there's going to be a compelling reason why people are in,
yeah,
and it's going to be hard to fight that.
yeah, yeah. Absolutely, absolutely. Um, so I asked you about your reading last time, and you recommended David Dreaman's book on contrary investing, and I read it. Fantastic. I really enjoyed it. I thought it was excellent, and it gave me a really good insight into perhaps how you were thinking about things. There's also another book that I think not on our pod, but you recommended a book about bond yields. Is that correct?
Yeah, there's a book called Inside the Yield Curve, or Inside the Yield Book, um, by Leibowitz and Homer, and that was when I did my CFA back in 1980. That was required reading. It was basically any bond guy has read that, I'm sure. It takes apart the bond, teaches you the yield side of it, components of the bond, etc. Teach you how interest rates work, etc. It's a great primer for anybody who wants to learn more about bonds.
And do you think that this will be it will stand the test of time through what we're about to see, or will be?
Yeah, because it's
Yeah.
not really about trying to call interest rates or anything. It's really about how bonds work.
So it's all about the mechanics, and once you
Yep.
understand the mechanics, you understand what's going to come. Okay, brilliant. And